Gold price premiums have returned to normal. And then this happened. Welcome to Silver Heist. Thank you to our returning subscribers and guests. We're a channel that likes to buy physical gold and silver, and we like a coin with a good story. If you like those things, please subscribe. If you've been stacking cash because you thought either the gold premiums were high or the silver premiums were high, I have some good news. I've done some research and it looks to me that the gold price premiums have returned to normal, or pretty darn close. And I'll show you with one exception. So it's a lot better than it has been in the past. And so what we're going to do is I'm going to actually show you the conditions which I believe led to the premiums being higher than normal. And then I'm going to show you what normal premiums look like, and then show you the prices of coins today, and to see what's different. Then based on the analysis of this premium, I will show you what happened next. So stick around. Okay, so here are the American Gold Eagles from the US Mint's website. These are all of the production numbers from 2020 on a monthly basis. These are the number of coins. So these are the 1 ounce coins, the half ounce, the quarter ounce, and the 1/10 ounces. And so what you see is that as we started the year, the 1/10 ounces are typically produced the most, followed by the full 1 ounces, and the half and the quarters are the least popular. But after we enter a bull market and the demand picked up in March, then they start producing 1 ounces big time. So this is kind of our target production, I'd say, on the 1 ounces and the 1/10 ounces. And so we're not there yet, but we're moving in the right direction. My belief is that the online bullion dealers want to sell the inventory as fast as possible, knowing they can replenish their stocks. So when they don't know if they can replenish their stocks, then the premiums go up. And when they know that they can just sell it as fast as possible, then they can lower the premiums. So the premiums are starting to lower because the supply is not only sizable, but more predictable. So this is through June 20th. So we're 2/3 of the way through June, and we've made more 1 ounce coins than we did last month, and not as much as March or April, but I think just the confidence that they're producing. Now, the other thing is the 1/10 has not been made. This is the 3rd month in a row the 1/10 ounces have not been made. So that's going to stand out as not a predictable supply and a sizable supply. We'll see where the impact is on that. Okay, so we're going to track the American Gold Eagle, and we're going to track it by percentage of premium above spot. And we're going to look at normal versus now, and see how close we are. So to track normal, there's a channel called the Stacking Stormtrooper. On February 10th, he did an analysis of what the premiums are on different size coins, and I'll put a link to that video in the description. And so he did it in terms of how much in dollar figures above spot price things were by the ounce. So 10 of these coins, how much above spot price would that be? I'm going to do it by percentage.
Okay, so the metric that I want to use is the premium percentage, which is which is spot price for an ounce minus coin price. Also for an ounce. So if there's 2 half ounces, we want to list that as the price over the spot price.
And so what he found at the spot price in February was that it was 14.8% for the 1/10 ounce. The premiums get lower the bigger coin you're dealing with, and at 1 ounce was the best value at 3.8%. Let's look at a couple of websites now and go shopping and see what the prices are. And so given the spot price of $17.46 today, what are the prices of the coins that we're seeing? So we'll go to Monument Metals and also a backup SD bullion. So what we find is with spot price of $17.46, this one is the 1 ounce coin is $18.44, and the half ounce coin for 1 coin is $9.65. The quarter ounce is $4.97, and the 1/10 ounce is $231. Whoops, $231. And this is all at a spot of $17.46. When you do this as a premium of the percentage over the spot price, what we find is that, and you can compare this percentage to the ones we've previously calculated. So this is 5.6%. On a side note, on March 27th, I did a video when the price of a 1 ounce gold bullion cracked 1800. It was 1800 for the first time. It was 1822, but spot price was only 1618. So it was a $200 premium for a 1 ounce coin, which is 12.6% in the past. So we have cut that dramatically from March 27th, probably the peak of the madness, down to 5.6. Now it's not 3.8, but we are significantly better than we were before. And so the half ounce is carrying a 10.5% premium. The quarter ounce is carrying a 13%. But the 1/10 ounce size is still carrying a sizable premium, 32.6%. And actually the 231 we had to get from SD Bullion because Monument Metals was sold out of the 1/10 ounces. So these premiums are tracking closer to the normal premiums. This one is not. The 1/10 is not tracking closer to that. And if we jump back to the previous table, the US Mint has not made 1/10 ounce size gold coins in June, May, or April. So without a steady supply to meet demand or a predictable amount in the queue that can be replaced, the premiums stay high. From watching the way the prices are working, the dealers will put a price on something with the aim of increased velocity to get them out the door as soon as possible, shrinking the premium to move them as fast as they can go out, as long as they can be replaced. This coin cannot be replaced, so this premium is staying high. If you want to work in dollars instead of percentages, let's take a normal premium that was based off of the old spot price, but let's apply it to the current spot price. So if the premium were normal, instead of close to normal, a 1 ounce coin would be $1,812 instead of $1,844. So you're still paying a little bit more than normal, $30 more. But that's within reason. This would be $942. This would be $481. But this one, where the premium has not been reduced, this should be going for about $200. So there's a significant premium attached to getting a 1/10 ounce coin today. So that's the difference. When the US Mint is making coins at a sufficient volume and they do it month after month, then the dealers can see the inventory. They can see a path to the inventory being replenished, and they can lower the premiums to move them fast as long as they can be replenished. But when the US Mint is not making a coin, the premiums stay high because they don't want to consume the inventory until they know they can be replaced. So that's the difference between these two. So if the Mint can increase their capacity and spread the product mix around, then all the markets can be met. The 1 ounce coin people and the 1/10 ounce coin people. And so in another video, we'll have to look at the silver and see what's happening in the silver supply. So we'll save that for another day. So what happened next is that I bought some more gold. And so the order has been placed. It is not in hand, but it has been confirmed. And so I'm buying a 1 ounce gold. So I've typically favored the 1/2 ounce coin as a good compromise between premium and affordability, but I went for the 1 ounce. So the final mystery will be, did I get an Eagle 1 ounce or a Buffalo 1 ounce? So all will be revealed when I get it in my hand. So don't forget to subscribe and hit the bell notification so you can see what gold coin I got. So have the American Silver Eagles premiums stayed stubbornly high, and are there alternatives to that in the silver world? If you'd like to learn more about that, I have a video called 5 Alternatives to Higher Premium American Silver Eagles. If you'd like to learn more, please click on our featured video.